The trade war between the United States and China has reached a fever pitch. China announced retaliatory tariffs of up to 84% on a wide range of U.S. goods. This escalation marks a significant turning point in the ongoing trade dispute. It has sent shockwaves through global markets and raised fears of a full-blown trade war. The trade war began in 2018. The Trump administration imposed tariffs on billions of dollars worth of Chinese goods. The stated goal was to protect American jobs and intellectual property. China responded with its own tariffs on U.S. products. This set off a chain reaction that has disrupted global supply chains. The latest round of tariffs is the most aggressive yet. It signals a hardening of stances on both sides. The tariffs target key sectors of the U.S. economy, including agriculture, manufacturing, and technology. They threaten to raise prices for consumers and businesses alike. The trade war has already had a significant impact on the global economy. It has slowed economic growth, increased uncertainty, and rattled financial markets. The International Monetary Fund, or IMF, has warned that a full-blown trade war could push the world into a recession. China's decision to impose 84% tariffs is a calculated gamble. It reflects China's growing confidence in its economic strength and its willingness to stand up to U.S. pressure. The tariffs are designed to inflict maximum pain on key U.S. industries. These include agriculture, which has been hit hard by Chinese tariffs on soybeans and other crops. In addition to tariffs, China has also taken aim at specific U.S. companies. It has blacklisted several U.S. firms, preventing them from doing business in China. China has also launched investigations into U.S. companies operating in China. This raises concerns about a more hostile business environment for foreign companies. China's actions are a clear signal that it is prepared to weather a protracted trade war. China has a large and growing domestic market. It is also diversifying its trading partners, reducing its reliance on the U.S. market. China's aggressive stance has taken many observers by surprise. Some analysts believe that China is miscalculating. They argue that the tariffs will harm China's own economy in the long run. Others see China's move as a necessary response to U.S. protectionism. The U.S. has responded to China's tariffs with its own set of retaliatory measures. The Trump administration has imposed tariffs exceeding 100% on a range of Chinese goods. These tariffs target key Chinese exports such as electronics, machinery, and consumer goods. The U.S. has also targeted specific sectors of the Chinese economy. For example, the U.S. has imposed a 25% tariff on all canned beer imports and empty aluminum cans from China. This is in retaliation for China's alleged dumping of aluminum products in the U.S. market. The U.S. argues that its tariffs are necessary to protect American jobs and businesses from unfair Chinese trade practices. The Trump administration has repeatedly accused China of intellectual property theft, forced technology transfer, and currency manipulation. However, critics of the tariffs argue that they are counterproductive. They say the tariffs are hurting American consumers and businesses more than they are hurting China. They also argue that the tariffs are damaging the global trading system and undermining the rules-based international order. The escalating trade war between the U.S. and China has sent shockwaves through global financial markets. Stock markets around the world have tumbled as investors fret over the potential impact of the tariffs on global economic growth. In the U.S., the Dow Jones Industrial Average plunged over 700 points after China announced its retaliatory tariffs. The S&P 500 and the Nasdaq Composite also suffered steep declines. European markets were similarly hit hard, with major indices in the UK, Germany, and France all closing sharply lower. The sell-off in global markets reflects growing fears that the trade war could spiral out of control. Investors are concerned that the tariffs will disrupt global supply chains, dampen business investment, and reduce consumer spending. All of this could lead to a global economic slowdown. The oil market has also been affected by the trade war. Oil prices have fallen sharply as investors worry that the trade dispute will reduce global demand for oil. China is the world's largest importer of oil, and any slowdown in the Chinese economy is likely to have a significant impact on the global oil market. Section 5. Corporate America. Braces for impact. From Apple to Delta, uncertainty reigns. The trade war is having a profound impact on corporate America. Businesses large and small are feeling the pinch as tariffs disrupt supply chains, increase costs, and create uncertainty. Apple, one of the world's most valuable companies, has seen its share price decline as investors worry about the impact of the tariffs on its supply chain. Apple relies heavily on Chinese manufacturing for its iPhones and other products. The tariffs are making Apple products more expensive for Chinese consumers, and could force the company to absorb some of the costs or shift production elsewhere. Delta Airlines, a major U.S. airline, has withdrawn its 2025 forecast due to the tariffs' impact on bookings. The airline industry is particularly vulnerable to trade tensions, as they can dampen travel demand and increase costs. Delta's decision to withdraw its forecast highlights the growing uncertainty facing businesses as the trade war drags on. The tariffs are also having a significant impact on smaller businesses. Many small businesses rely on imports from China for their products or components. The tariffs are forcing them to raise prices, cut costs, or find new suppliers. The trade war between the United States and China is having global repercussions, with countries around the world feeling the impact of the escalating tariffs and the uncertainty they have created. Europe, in particular, is caught in the crossfire of the trade war. The United Kingdom, which is in the process of negotiating its exit from the European Union, is facing pressure to take sides in the trade dispute. The UK government has said it is committed to free trade, but has also expressed concerns about China's trade practices. France has been particularly vocal in its criticism of the U.S. tariffs. The French government has urged French companies to halt investments in the United States and has called for a coordinated European response to the trade dispute. The European Central Bank has said it is prepared to take action to stabilize the Eurozone economy if the trade war escalates further. The ECB is concerned that the trade dispute could undermine economic growth in the Eurozone, which is already facing a number of challenges. Experts weigh in on long-term economic impacts. Economists and analysts are increasingly concerned about the long-term economic impacts of the U.S. China trade war. Some experts warn that the tariffs could tip the global economy into a recession if they are not rolled back soon. The tariffs are already having a dampening effect on global trade and investment. Businesses are delaying investment decisions as they wait to see how the trade dispute plays out. Consumers are also becoming more cautious with their spending as they face higher prices for goods affected by the tariffs. The longer the trade war drags on, the greater the risk of a global economic slowdown. A prolonged trade war would likely lead to job losses, lower wages, and reduced economic growth. It could also fuel inflation as businesses pass on the higher costs of imported goods to consumers. The trade war is also straining relations between the United States and China, the world's two largest economies. This is making it more difficult to address other global challenges, such as climate change and nuclear proliferation. The trade war between the United States and China is not just an economic conflict. It is also a geopolitical struggle for power and influence. The tariffs are a symptom of a deeper rivalry between the two countries. This rivalry is playing out on multiple fronts, including trade, technology, and security. The trade war has heightened tensions between the United States and China, and has made it more difficult for the two countries to cooperate on other issues. For example, the United States has accused China of not doing enough to stop the flow of fentanyl into the U.S. The U.S. has also criticized China's human rights record, particularly its treatment of Uyghur Muslims in Xinjiang province. The trade war is part of a broader shift in the global balance of power. China's economic rise is challenging U.S. global dominance. This is leading to increased competition and tension between the two countries.